All right, we should be good to go.
All right, all right. Let people come on in.
As you guys are coming in, make sure you guys are giving the Retration Room a big thumbs up too. We got to thank him for putting this show on for us tonight.
Yeah, I appreciate you. Let's give it a few more minutes. We'll let people show up. If anybody's out there and they can hear everybody on here, just throw us a thumbs up.
I'm still getting this, Rich. I'm still seeing the thumbnail only. Are you seeing a live feed?
Mine was. Let's see.
I saw it live on mine.
All right. All right. It's live now.
Yeah, it's on a pretty significant
I didn't
lag.
refresh. I literally that was my fault.
It's on a pretty big lag. Right. But that's all right. I'll bring it up on my phone. So I saw it live on mine. All right, we got Hidden Freedom showing up. I like to see it.
What's up, Dave?
Let everyone trickle on in. So you think this debate will move the markets tomorrow?
Absolutely, man. hey, whoever wins this debate, either we're going back to 65 or we're going back to 30, depending on the debate tonight.
If it goes down, Mokie's taking credit. We know
absolutely. You know I will. I'll be setting my alarm on start posting on Instagram at 6 a.m. tomorrow if I see any downward trends.
You don't have to wait. You can just look tonight at like 1 a.m. 24/7.
24-hour market. That's true.
That's the thing with I was talking to some friends, like at least with the stock market, you can go home at work after 5, have a couple of drinks and not have to worry about your portfolio moving any which direction.
I've seen people say people on Twitter will say something like, why can't the markets be open on the weekend? I want to do this. I'm like, are you kidding me? The best part about it is that it closes down and I don't have to worry about it for a little bit. I mean, Moki would say you never have to worry about it if you're doing what he's doing. Yeah. So maybe that's the argument right there. All right, we'll give it till 8:05 and then
we have 5 minutes for everyone to trickle in.
Yeah.
Dave's saying let's go back to 4K. I agree, man. Let's do it. I would be a buyer at 10,000 and below. I swear I would. I would put in $1. Just $1.
$1? Man.
That's it.
You put that in an index fund, it could be like $1 and 0.000.
My multiplier at my age is 21. So if I put that in an index fund at 65, it'll be $21. So, that's my opportunity cost. That's how much I'm willing to risk.
You'll be able to get like a sandwich at Chick-fil-A with inflation.
Yeah, at age 65, probably.
I'm just sharing out as many places as that I have community.
I would share on my Twitter, but I think you're my only 2 followers, so I'm not gonna I'm not gonna share it there.
Well, we're here.
Yeah, let me put where's the helpful entrepreneur? He's got a Discord too, Mr. Rick.
Like I said, not expecting a huge show in here, but the nice thing is it'll be recorded either way, so we'll be able to. I think it should auto stay on YouTube, right?
Yeah.
Okay, I'm gonna record it, like straight up record it, and then I'll probably just produce it after.
Yeah, I wonder if we could cut out like this soft intro. We're doing now. We're waiting for people to come in.
I think you can do soft edits in YouTube, right?
Yeah, in the editor.
Okay, so I'll do that afterward.
All right, we got 7 people in. Everyone feel free to light up the live chat too. Love to hear the feedback.
Come on, guys. Don't be shy.
And if you're in the house, make sure give it a thumbs up too. It helps more people find this video. And a lot of people are probably looking for answers after probably one of the most volatile weeks in a very volatile market.
You just found the right channel that has all the answers. So
all right, 2 more minutes. I appreciate everybody who's standing by and just waiting. We don't want to get started too early.
I see subscribers climbing up. I've seen like 10 pop up. No?
Yeah, it's doing all right. That's big numbers for me, man.
I'm saying the last hour.
Oh yeah.
Where were you at? Where do you last remember being?
Like 450, 449 or something.
Oh, okay, it's 452 right now.
They got a couple.
Dude, that's big numbers for me. 2 subs a month, man. That's steady right there. Like the index funds of YouTube.
Hey, man, slow and steady. Hey, slow and steady wins the race, man.
So Rich, you'll kind of start it up and then go to opening statements, right?
Yeah, I'll kind of go with some moderate. I mean, there's not really going to be ground rules, but just some guidelines, and then I'll go into kind of starting arguments from you guys, and we'll go from there.
Let me put it in one more story.
We're 4 people strong right now.
You sure? I saw like 9.
Yeah, I saw too. No,
maybe
looks like
mine's
they're dropping
lagging.
off. We're not entertaining the people, man.
Yeah, they could fall off. Bear with us, guys.
Come on, guys. Stay in the room. That's the debate of the century, man.
There will be fireworks for sure.
I think we might just need to get going. And
yeah, just let it.
I think that's the way we go.
Yeah, we'll let it.
Okay.
I'm ready.
Cool. Sweet. Well, I'm just going to act like there's a million people watching. So for everybody watching, really appreciate you guys being here. Very thankful for Moki and Ryan. They were kind of the ones that reached out to me actually to moderate this debate. First time moderating a live debate. Obviously, I've talked to both these guys, I think at least twice on my podcast. So very familiar with them, familiar with their viewpoints. And we're just going to jump into this. I'm just going to kind of work as a moderator and make sure that people kind of get their time to talk. I might interject with specific questions, maybe challenging each of their cases. And other than that, we'll just kind of go from there. I am going to jump into quick intros. So on the bull side of today's crypto argument, we have Ryan. Ryan's a business owner, entrepreneur, and runs a finance and investing YouTube channel. He's an early investor in cryptocurrencies, specifically Ethereum. I think at like 120 or 150, right?
I chased it from 300 down to 90, so I'm used to the volatility.
Okay, cool. Bitcoin Cash, Bitcoin, and then maybe a few others that I'm unaware of. But he's a huge advocate for cryptocurrency and the potential that it has to take over the finance world. So that's kind of what we're looking at with Ryan Giffin. On the bear side, we have Moki. Moki is an entrepreneur and runs a YouTube channel, Moki Finance. He actually recently quit his day job and has been pursuing his channel and his channel outlets kind of full time. Moki's an advocate for index fund investing and has invested zero of his own money into cryptocurrency. I know Ryan over there maybe gifted him some Bitcoin Cash, but we'll put that to the side. He's a non-believer and thinks investing in these assets can be dangerous. So that's going to be kind of our going in game plan here. Fellas, for starting off, I'm going to put a number on my calculator on my phone. And Ryan, you are the one who's not in the Midwest, so we'll call you the away team. Go ahead and call even or odds, and I'll show you my phone. I'm not going to do anything fancy, so even or odds?
Even.
Okay. It's an 8. So would you like to go first on opening arguments or second?
I'll go first.
Okay, whenever you're ready.
All right. So my name is Ryan Giffin. I run a YouTube channel all about investing in different asset classes, and a big part of my investing thesis is built around cryptocurrency. I'm fascinated with the idea that for the first time in human history, any human can send any amount of money to anyone in the world for a fraction of a penny instantly, and nobody can stop it. I think that's the most powerful invention since really the internet, and maybe even bigger than the internet. Since early man, people used to just trade physical goods. Like if you had a cow, you traded it for someone's sheep or whatever resource you needed. And then we needed to come up with a medium of exchange. We tried several mediums of exchanges, and we ultimately, from rocks to shells, and we eventually found precious metals, which did a great job for many years. Early people used to trade gold and silver, but when it became too cumbersome to store their value, they would actually leave it at the goldsmith and trade the paper value of their gold. It became so effective that governments started adopting it, and that's when things started to become a bit dishonest. The early Roman Empire used to use gold and silver, and they would actually put base metals into that. And that's where the actual term that comes, so you say debasing the currency, the Federal Reserve debased the currency, actually stems from governments putting base metals into precious metals. Move forward many centuries later, you have governments still using it, and it works as a restraint in the United States. People use gold and silver as the reserve for the United States back until really 19 2013 is when we got the Federal Reserve Act, when things started to change. And it wasn't until, did we lose Moki?
Looks like we lost Moki.
I'll carry on. It wasn't until President Roosevelt in 1933 set out the Gold Compensation Act. And what he did, he took everyone's gold, he made it illegal to own gold so we could get rid of the gold market. And what they did is they price fixed the cost of gold to $25. And they did this for several years so the government could be a little bit more dishonest in their money. They price fixed it. So this worked well until 1971, when foreign governments were demanding to be paid in gold rather than paper. So what we actually have in 1971 is probably the biggest thesis to own cryptocurrency now. When we moved away from the gold standard and went to paper currency, the wealth gap in this country has spread by the top 1% holding 99% of the wealth. And the reason being is because government has no restraint and can print as much currency as possible. And this is great if you are holding assets. So holding an asset like stocks and real estate and now cryptocurrency made you exponentially wealthier. But if you were poor, the government printing away your money made you poorer because you were just paying for your goods and services and didn't have a good store of wealth. So this is where this allows any human the opportunity to store value and not be printed away by any government, not only in the United States. We trust in cryptocurrency the rules of mathematics, not the whims of politicians. We believe that we can stop war with this because most wars are fought with inflation, printed dollars. This can make the world a more peaceful place. It can make doing business easier. And that's why you're going to see massive amount of adoption. Right now, we currently sit at about a $1.5 trillion asset class. And it certainly is volatile in nature, but the definite trend is up. It's been the best performing asset of the last decade. And Bitcoin in the last 3 years has outperformed the stock market every single year since it crashed in 2018. In 2019, it outperformed the stock market in 2020, and it is doing the same in 2021. And while volatile in nature, a lot of that is predicated on Bitcoin's halving cycle, which takes place every 4 years. So what that means is Bitcoin halves its mineable supply every 4 years. It was just a pre-written code. And it's actually ingenious in a way because that's what's created the mania. If Bitcoin just inflated its 21 million supply that it'll eventually be every hour, you would not have these huge run-ups in price, but that also wouldn't have made it quite the mania it is and becoming the fastest asset class to reach $1 trillion in market value. It took Google 22 years to become a $1 trillion company. It took Apple 40 years to be a $1 trillion company. It only took Bitcoin and cryptocurrency 12 years. This trend is likely to continue because currency is currently over a $100 trillion asset. Storing value is extremely important and transacting value is extremely important. And the last little case I'll make is it also helps with freedom of press. Julian Assange is been prosecuted and thrown in embassies and jails and tried to censor him for telling truths about what goes on in the world. And he's been shut down by PayPal, Visa, any other central authority, any central point of attack. That's what cryptocurrency doesn't have, is a central point of attack. We have 10,000 nodes that operate in over 100 countries that the only way you can shut down the Bitcoin network is to go after these 10,000 nodes and kill these people and go to every country, go to the top of Russia and go to Hawaii and go to Africa. You would need to do all that, but you can shut down people by using Visa and PayPal. So he operates by being able to accept cryptocurrency and keep the freedom of press still alive. So it is, to me, and there's many other use cases for it in smart contracts, decentralized finance, even notaries can store information on it. Even artists can publish finite art by saying that, by putting a digital token on a blockchain, saying that this is the first one to ever be created. This is going to be the most powerful and largest asset class in humanity. And while it may go down, it may go up in the short term, in the long run, the early adopters will be rewarded handsomely. That's my opening statement.
All right. Thank you, Ryan. Looks like we got a lot more people in the chat, so that's good to see. Just for everyone who missed it, Mokie's going to be giving his side of the story, which is going to be the bear case. So Ryan will be defending cryptocurrency today, and Mokie will be going against it. So Mokie, whenever you're ready, you can start your opening statement.
Absolutely. And before I start, I just want to say Ryan is 10 times smarter than me when it comes to cryptocurrencies. I don't have all those facts that he just laid down. So, but I do have facts tonight. So, in my opening statement, guys, I'm just going to take you back 10 short years. 10 short years ago, where there was no cryptocurrency, where there was a world that was just coming out of a great financial depression. And index funds in those last 10 years before cryptocurrency came about have been the best asset class. Now, I understand since Bitcoin has really started its run up, I understand 300, 400, 1000% gains have basically taken a hold of a mania that we have seen before. This isn't the first time mania has occurred, and this isn't the first time that it's actually occurred on virtual assets. So the internet bubble in the 2000s had the same exact run up. You had a lot of speculation. You had a lot of people that knew the price of everything but the value of nothing. So 10 years ago, what was the value of this cryptocurrency market? It was non-existent. It just came to form. Currently, the cryptocurrency market sits at a $1.5 trillion market cap. There's over 10,000 individual coins that you can buy on the market with over 380 exchanges. So I'm not going to sit here and tell you this thing is not growing. It's absolutely growing. But like all manias, they do have a peak. And I believe that thinking that you can virtually hold an asset and act that it stores value when in return it goes down 20 to 30% in a day is never going to be a good store of value. The reason people like asset classes that stored value such as gold or silver or precious metals, because those did really well in times where the market or the times where interest rates were really high and the market was underperforming. But as soon as the market turns back around, assets like those usually underperform the market over a longer period of time. Now, I'm not predicting here what Bitcoin or what any other cryptocurrency will do, but historically, I've never been one to speculate. I never invested in any type of investments that would go up or down in value by somebody sending a tweet or by somebody's appearance on Saturday Night Live or by a hashtag on social media. To me, that's speculation. I learned from one of the greats in investing. I learned from Jack Bogle, and I read all of his material. And if anything Jack Bogle taught me was to be patient and to ignore all the noise around you. The only thing that really works with investing is having time on your side. It looks like in these times, in these markets, people are trading 24/7. And we've seen cryptocurrencies crash overnight, literally overnight. You wake up the next day and you're down 15, 20%. I can't picture in my portfolio, in the portfolio that I worked so hard for, I can't picture it going down 20, 30%. I know some people can, and that's absolutely perfectly fine, but I personally can't. So today, I'm going to bring you some of my biggest bear cases against cryptocurrencies. I'm not going to really attack on any specific coin. I actually, in the long run, do believe there will be coins like Bitcoin. And Ryan has actually convinced me in the Bitcoin Cash that he's sending how easy it is to actually transact that money. Within milliseconds, we can have access to that money. And there's basically no transactional cost. So I'm not going to argue those points, but I will argue points that this market is in a mania and this market's overpriced, and that eventually over 80% of this, and I think Ryan, you'll believe the same, eventually over 80% of this market, if not more, will get wiped out. And I think the coins that end up staying behind or what's left of the market after that crash will really determine what the future of this market is. But I personally can't have anybody that follows me or anybody that does investing, I can't endorse them putting their money in something like this that can get wiped out overnight.
Ryan, any immediate thoughts on that?
Yeah. So as I mentioned, the volatile nature is one that that comes with that's the cost you pay for outperformance. Just because something is volatile doesn't mean it's bad. And a lot of times, early assets, think in terms. I like the analogy: a small boat in a big ocean will rock more than a big boat in a big ocean. So as market cap rises, the volatility will die down, but the gains that you can make will be less. So you must accept that. Bitcoin used to bounce from $2 to $10 a day, 80% swings. We're doing much better with 30% swings. In March last year, the stock market fell. I see a comment here: banks fell 10% overnight. If you went to a gas station 6 months ago, your dollars went down against gas prices by 50%. And yet people aren't yelling at their dollars, and they're not giving all their dollars away, but they should. They should be doing it for cryptocurrency in the long run. But I do follow something, and if you follow my channel, I follow it almost in a religious sense, is the Trollo chart. I don't try to get too caught up in the noise, and I do agree with Jack Bogle's assessment in the market is be careful of the noise. I look at terms of what is the fair market value of cryptocurrency, and I predicate that on its median value. Its median value, what it overall trades to. So I use something called the Trollo chart that calls a median value price for cryptocurrency, and I buy when we make lows against that, particularly in the bull and the bear market. That's how you buy Ethereum for $100. If you're chasing coins named after dogs and you get hurt, you must accept the risk with that. Also, not too much of a jab at Dogecoin, as Elon Musk, if he wants to make that a great cryptocurrency, it's just like the Buccaneers signing Tom Brady. They can turn into a great team too, possibly. I'm not saying that'll happen or not. So while volatile in nature, you will get rewarded in the thesis that this is a great investment by being an early adopter. Only 4% of the world has touched cryptocurrency yet. I believe diffusions of innovation theory really gives way to the massive market adoption when about 15% of the people touch it, and then you get like the real adoption, and then everyone, and you later have the laggards. Everyone eventually will touch cryptocurrency. It's just when and at what price.
So I'll counter that. So I don't think that's true that everybody will touch it. So let me, from the point that I'm coming from is, I was never a Forex trader. So I never traded physical currencies because of the fact that it's trading. It's a 24-hour market where even though Forex is heavily regulated by the government, it's very difficult to pull off scams or market manipulations when you're a Forex trader. You're still trading. And I did not like the aspect of trading. That's why I never held anything like that in my portfolio. Cryptocurrency to me is just a digital form of Forex trading. I can't understand the fact that if, for example, a market's open 24/7, 365, that you can comfortably say that it cannot be manipulated when it's not governed by anybody. There is no, I understand the whole point of Bitcoin is so that there is no central bank or there's no central government that can control it. But at the same time, in the roaring 20s, before the stock market was really regulated, speculation ran rampant and people were being manipulated. There were stocks that were being driven up that had no business being driven up, just like we see in today. We see coins being driven up, as you mentioned, Dogecoin, but I got Shiba Inu, Mooncoin. I mean, I got Moki coin. You guys trying to invest? I mean, I got it. So when you see these things being driven up to prices that can't be, I mean, for example, Dogecoin with a market cap sits at about 75%. It's bigger than 75% of the companies in the S&P 500 just by market cap alone. So when you start thinking about things like that, and that's a coin that I know nobody here hopefully believes in, but that's a coin that sits now 6th biggest in the crypto space. So it's a coin that if you were an early adapter, you're probably a millionaire. But at the same time, it's a coin now that these young investors are really starting to get behind to believe in. And I think those are the investors that are going to lose the most, and they're going to be hurt the most because they're backing things that don't have intrinsic values. There's no way to put a value on something like that. As far as I know, you guys can correct me, but as far as I know, Dogecoin is not really I mean, I know you can trade it back and forth and you can hold it in your wallets and all that, but what is the physical use for that outside of people saying that it can be used like cash? I don't ever see that happening. I don't see me transacting in Dogecoin or Fortune 500 companies accepting these things as payments. I know I've heard stories of certain companies that are, but I can't put a physical use on that. And probably I would say 2 or 3 coins so far out of this entire 10,000, you can convince me that there's going to be a physical use for them. Unfortunately, those 3 coins, they do control 50-60% of the market, but they're not the entire market. So I'm more worried about people that are speculating into these smaller meme coins that are going to get hurt really bad.
And I think, just to jump in quickly, for the sake of argument tonight, my assumption, Ryan, you can correct me if I'm wrong here, but I don't think anybody here is really advocating for Dogecoin or SafeMoon or any of these. So in terms of that kind of stuff, like, yeah, I think most of us would agree here that's bad for everybody, unless you're one of the people that bought it, 100th fraction of a cent or whatever it was. So I'd prefer we don't go down that route, because I think we probably all agree that that stuff's probably bad for the crypto market. I don't know how Ryan feels about it, but I feel it's bad for the crypto market. It's bad for really all the asset classes because it kind of dilutes everything. Ryan, I don't know if you want to quickly touch on that, but I'd like to stick to just like strictly the main cryptos, and then we'll kind of go from there.
Yeah, like I believe in people's right to do stupid things, though. I don't believe in protecting people from themselves. I believe in teaching people to think critically and analytically. And I believe in free markets and competition of currency. And I believe the cream rises to the top. And I do advocate for people to make better decisions, but I will not force them to. And let's say, for example, what if, when in this more monolithic type currency system, there's been a coercive push towards one currency that inflates, like Dogecoin, actually the dollar inflates faster than that. And I'm not saying Dogecoin is better or worse than the dollar, but it's, you are actually getting pushed a very bad currency on you. So that'd be my come back to that and my thesis into it.
So yeah, and to be fair, I mean, there are stocks that, like we've seen in the past year, Nikola Motors kind of pumped a lot of air into the market, and a lot of people believed in this thing, and little did we know they were rolling a truck without an engine down a hill. So, and that thing probably had similar volatility for a little bit as some of these meme coins did. So yeah, so we see it across all asset classes. It just almost seems, without the regulation and stuff within crypto, it's a little bit more dangerous, I would say, kind of in that end. Talking about the volatility, I want to kind of go both ways here. So first off, Ryan, for people like you that know the crypto market, you know what you're getting into, you expect 50% pullbacks, maybe even more, and you might know to buy. How can you, as somebody who's just giving guidance to those who are a little bit less informed, kind of like how Moki was talking about, how can you justify somebody buying into a crypto? Let's say they bought Bitcoin at 55,000. That was their first exposure to cryptocurrency. And now they're freaking out as it's, I think we're back at like 40. But what is your justification there? Do you really think that's the best way to introduce somebody into investing, or how would you at least go about that process?
Two answers. One is, and this has been my experience being in it. If you're investing into crypto and you go to the stock market, I don't think you'll be bothered at all by the volatility. Your pain threshold for volatility will be a lot stronger, but that's not necessarily the case for it. I would tell people, like right now, I'm trying to really push my thesis right now. Like I believe we are still in a bull market, but there is also the opportunity that you're in a bull trap. And that's something that you really have to think about and hedge your bet, saying, what is the probability? And something I advocate all the time, and not a lot of people do it. And even I have to go sit down and do it, but I use the Kelly formula. The Kelly formula is a mathematical equation that lays out probability of outcome and rate of return. So, and it tells you how much your available capital you should allocate into that investment. It works fantastic in games of chance. And for me, I use longer term trends in the market of saying how I know I'm right, my probability of outcome. So I'm about 70 to 80% sure that we are still in a bull market, and the market cap will exceed $5 trillion this year. And that is, we're only a $1.5 trillion market. And I use that on prior trends on how far we go past the trend line. And that's how I really move my amount of capital into the investment. I use the Kelly formula and say, this is how much my net worth should be in it. And investors who have used this, like Warren Buffett, like I can't remember the first guy that introduced it to the market back in the 70s, but early professional, gamblers use this. And that's how I would. It sounds crazy, but like there's two sides of this. There's the investment side of it, and then there's the utility in the world that it does. And it's treated me very well. I'm far outpacing the markets. I have an overall 200% return on my portfolio because of it. And but I do warn people, at $5 trillion market cap, the risk to reward ratio is no longer anymore. It's actually not favorable. And I would advocate for a different asset class at that time, at least to have such a high exposure to.
All right, Moki, reaction to that, and then I have a follow-up for you once.
Yeah, I mean, that just sounds to me like a bunch of market timing. Use words like gambler and things like that. I mean, that just, saying that at 5 trillion, that is going to be, where the market's going to crash. I think that's trying to time the market. You guys know me, I'm never going to advocate for market timing. But the other case, Ryan, that you're saying with the bull trap, I think the first time I ever heard of Bitcoin, I don't know when you guys did, but it was 2017 when it did its big run up. And I remember reading a lot of stories back then of people that were saying that, this thing was going to go to 500,000 or whatever the case may be, peaked out at 20,000, and then it lost something like 83% of its value over the next course of a year. It was a slow decline. It didn't just happen overnight. Just kind of like what we're seeing now. I think April, when we saw the peak at 64, whatever, 63.5, since then, it's really been a slow decline. Yeah, we've seen peaks of run-ups, but we've also seen volatility on the downward trend a lot more. I think anytime you see an asset class go down 50% almost, which I know Bitcoin hasn't yet, it's 40. But when you start approaching that territory, that to me, in stock market speak, is not just a correction any longer. It's not a healthy correction. That is a straight on crash. And holding something like a Bitcoin asset, and we'll stick to Bitcoin, holding just 5% of it in a pretty balanced portfolio, something that I talk about with index funds and bond funds all the time. If you had a 60-40 portfolio and you just added 5% of Bitcoin to your portfolio, your volatility would increase by 20%. That becomes very difficult for investors like myself who are long-term dollar cost average investors. You can't dollar cost average into a space that is going up and down 20%. What if you catch it on the wrong 20% and you catch it at the top, and then your dollar cost averaging buys at the top, and then for the next year, you're basically riding a sunken ship. So it can increase huge volatilities to your portfolio if you're somebody who's trying to retire early. Yes, it could be a shortcut to retiring early, but it could also prolong your early retirement by many decades if you invest wrong. And the last point, the biggest point that I have, and I think, Ryan, you can attest to this, is if you invest in this asset class and you get lucky in the beginning, that could be the worst thing for you, because this thing can take hold of your entire portfolio, can control something like 50-60% if you experience some massive growth. You're not going to know the timing on when to get back out. You can look at 60 charts, you can look at 50 graphs, you can look at what Warren Buffett does. Unfortunately, the matter of fact is none of us know, and thinking that we know is sometimes the biggest thing that ends up damaging our overconfidence bias is what ends up damaging our long-term performance.
Quick question for Moki, and then Ryan, you can respond to that. A lot of talk about volatility, right? Volatility being an issue. Do you not at the same time realize that, and I don't know the exact index funds you're investing in, but a lot of the growth that you see in your index funds is based off of these large companies that went through a long series of lots of volatility. So you're still benefiting in the volatility. You're investing in a more diluted asset where you're not seeing it as much.
Correct. Yeah. So I own S&P 500 total market funds that own Tesla now, right? And Tesla had crazy volatility and
Bitcoin.
And yeah. And it's just something, look, man, it comes down to this, right? If you're going to be, there's a very simple formula to building wealth, in my opinion. You shouldn't try to reinvent the wheel, right? The wheel tells you it rolls forward. Jump on the train and don't jump off. So other asset classes, I feel like you can't jump on the train and not jump off. People are almost incentivized to jump off. Bitcoin is one of them. And Ryan, you can attest to this. I'll ask you this right now with your thesis on the 5 trillion market cap. If the cryptocurrency market reaches the 5 to 7 trillion that you're talking about, your plan is to jump off. What if it reaches the 5 to 7, you jump off and then it explodes from there? Well, what would you do in a scenario like that?
So I think I may have thrown some people off when I talked about a formula people use for gambling, but it is helpful for asset allocation. And I've allowed crypto to over allocate my portfolio because you're not going to be able to make 2,500% returns within a year without doing that. You're not going to make that by not having high conviction and building a thesis around that. But I think at that time, then I wouldn't completely go out of it. I would probably move it more closer to 5 to 10% of my wealth at that level, probably closer to 5. And I understand people don't think like you can time a market, do all things. And I know that's not necessarily for everyone, but I really believe if you look at the Bitcoin halving cycle and the 4-year nature of when this market is topping in 2013, 2017, 2021, it's happening a year after its halving cycle. So even if demand just stays constant for Bitcoin, the supply cuts in half and the price only has one place to go. And I really believe in this asset class in some sort of timing it in terms of its relationship with its halving cycle. Because again, demand just needs to stay steady. It doesn't even need to increase, which I believe it's going to increase demands for Bitcoin as the need for storing value is more important, as cash has become a liability. With the inflation rate of 4.4% this year, a company like Apple holding $200 billion worth of cash will bleed $10 billion. In Bitcoin, they don't have to go through this pain. They don't have to worry about a central authority taking away their purchasing power and no longer making cash a liability. And that's why you have companies like Tesla converting 8% of its balance sheet into cryptocurrency. And that's why you have a company like MicroStrategy pretty much going all in, which who knows, that could be overkill, but it's treated his shareholders very well. So that is, and so I think if you want to, people sometimes fall into this, financial advisors will say, past performance is not an indicator of future performance. That's a financial disclaimer. It's actually the best thing that we have. So not using it as a tool, or I should at least say using it as a tool has helped me. I don't want to say it's not a good thing to do, but it's helped me.
Yeah, let's talk about inflation, Moki. So how do you view this? I mean, we're seeing what some are saying is to be an extreme inflationary period. Obviously not extreme inflation, but I think you know the adjective I'm using there and how I'm trying to describe that. But something like Bitcoin that has theoretically outperformed the market greatly, and if you're holding on, is about a 200% annual return, is obviously going to keep you ahead of inflation. Things like index funds will still do that, right? But it's a lot less, and a 4% inflation is going to eat into your gains a lot more than something on the crypto side, at least speaking historically. So speak to a little bit about how you view inflation and how you're combating that.
Absolutely. First of all, we can't speak historically on crypto when we only have a decade of data, so I can't talk historically on that. But absolutely, if you have inflation, like I don't know if, again, I don't want to speculate. I'm not a big fan of speculating, but if we have inflation anything like the 70s, our real return in the stock market's looking more like it might be flat or negative, right? So that's a real worry that I myself have as an investor in the stock market. So people do at times in inflationary times, they look for safer asset classes that will outperform or hold their value compared to whatever the rate of inflation is. Naturally, that's been gold for as long as I've researched the investing. It's always been gold. I can't imagine a time where interest rates start to rise again. So I know that's coming, but I can't imagine a time where interest rates are rising, inflation is kicking up, and people are saying, they're running away from the stock market and they're saying cryptocurrencies are going to hold their value. The reason I can't imagine that time is because we've seen in less than 5 years this asset class that's supposed to hold its value. We've seen it go down 80%. We've seen it go down 50%. And this is just in a matter of 4 years. How can a serious investor trust that as an asset class to hold value when, Ryan, you sent me $5 US worth of Bitcoin Cash? Let's say I was a business and you were my supplier and you paid me in Bitcoin Cash. All of a sudden, you paid that $5 in USD to me. Now I'm holding $2.50 or $3 worth of that product that you paid me $5 for. So how that holds value, or how companies can hold this on their balance sheet and think that they would beat inflation when the volatility is so high that that business might not survive 6 months if there's a huge correction in this space and you're stuck holding these assets that are way too volatile. The reason the current system works is because the entire world trusts the US dollar. The US dollar was taken off the gold standard. And I know there's a lot of talk that fiat currency now it's worth what you think it is worth. But at the same time, when the entire world adapts as its own currency, it's worth a lot more than any other virtual, any other limited supply, any other asset class that has, I don't care what it has, it's not being used as a currency for the whole world, at least not yet. And I'm not saying the Bitcoin won't or Bitcoin Cash. I can see a case more for Bitcoin Cash than Bitcoin, but we're not going to get into that. You know way more than me about that. But I'm saying is people are not going to be willing to trust in times of high inflation, when the tech sector starts to go down, when the stock market starts to go down. They're not going to trust something that they can look to the past, even though it's a short past, and they can see volatility through the roof. They're going to want something a lot more secure, something more like gold, something more like inflation protected bonds.
Right.
So unfortunately, when the volatility dies down and all the Bitcoin halving cycles are done and all the 21 million Bitcoins are mined, the opportunity will no longer be to create massive amount of wealth like we've been doing for the last 10 years. So that kind of just plays into being a little forward thinking and actually being looking backwards, because every great civilization that has used a paper currency has failed. And it's also somewhat unique that every 100 years, the world tends to change its reserve currency. Bretton Woods brought on the United States as the reserve currency, and before that, it was the British pound. And I think you'll see something similar in the next 10 to 20 years. I don't think the dollar will keep its reserve world currency, and I think it will almost better serve the world if it wasn't a monolithic power holding it. There would probably be more peace if it was a more decentralized network and not any one power having the reserve currency to rule over the other world powers. So I really think Bitcoin is a case for peace. I think it's a case for ending war, making it harder for governments to tax their people. Because if you can't fund war without either taxing your people or inflating their currency. If you make it harder to inflate their currency, then you have to tax them. And what we saw when it was harder to print money during World War II, we actually used bonds, government war bonds people bought, and they actually had to vote for the war with their dollars. And one could say that could be a more just war. So I think cryptocurrency can make the world a more peaceful place in terms of a hegemonic power ruling the currency, and by not making it so easy to rule a military industrial complex and invade other countries. And last thing I'll put into that is I think there's a real opportunity to bank the unbanked. Many of the world does not even have a bank. That's a huge opportunity. And we see in the world right now, when people first get their most, food, water, basic supplies, they want access to the internet. They want a phone. Phones are cheap now. And you have something like Starlink that wants to put low-hanging satellites into outer space. I think there's a real opportunity to get everyone the ability to store value and transact it back and forth. And the volatility argument is certainly one for those people, but one I think that will be solved by more market adoption, and the Bitcoin halving cycle is no longer having such an effect and shock to the supply chain.
Okay, comments on crypto's usability. I know that's something that you talked about before.
It's not going to stop world wars. I know that for a fact. I mean, I think people are always been fighting for power. They've been fighting for land. Crypto is virtual. There's no way it's going to stop people from wanting to take land over. I came from a country where we had a civil war, so I'm, it's pretty familiar with how power works within countries. And I'm not just saying the United States, the country that I came from, but we see it even in the news today. People have fought since man was alive. So not gonna solve any kind of world war problems. But what I think, Ryan, my biggest usability thing with that is the government, and you mentioned it here, is the people will get to keep it and the government will have a difficult time taxing it. I think anytime you play with the government, you try to take the government's money or try to get a benefit as far as not paying taxes, that's when the government will step in. I think the government sat idle. Speaking of the U.S. government, I've seen and read reports with the Turkish government and now the Chinese government sort of putting more regulations on Bitcoin and on crypto. But I think the U.S. government has stood idle and sort of let this thing run away from them. I don't see them doing that much longer with ETFs being created, with this speculation running rampant, and with this much millions and now trillions of dollars kind of being traded around in this space. The government's going to want to make sure they collect taxes on this stuff. So that case that basically Bitcoin is going to be a way to sort of get away from government collecting taxes, I think two things are certain, as we always say, death and taxes. We can't expect that any government will sit idle and let something like this take over to the point where they're not going to be able to get the reins back in and make sure they get their hands on it. And the last point, just on the usability thing, I just want to touch back on, Ryan. I wanted to ask you a question about, because I know you mentioned that companies like Tesla and other companies are keeping this on their balance sheets. Just quickly answer for me. This is, again, something I've been always wondering is, if you're keeping it on your balance sheet, what happens when this 80% crash happens that you're kind of predicting? Is that something that as a business, these guys are supposed to time as well and get it off their balance sheets? Or are they going to be stuck holding something that corrects 80% and potentially bankrupts their company?
I think like what you saw with Tesla after the Q1 earnings, they made more money by holding Bitcoin than they made in their company's history of ever selling cars, and they took profit. I think it'll be a very useful tool to not only, I do think you would have to say there'll probably be algorithms done to say how much we should keep on our balance sheet, what would be too much, what would be too little to benefit as an inflation hedge. Certainly, I don't think, there are some bad CEOs out there and there's some good CEOs. And I think we'll let the market, treat it appropriately. And those people who understand the volatile nature of it and don't over allocate their balance sheet to it will benefit. And those who do and need capital at those times could really hurt. Absolutely. So that's yeah, I think, it comes with responsibility. Absolutely. And to touch on, like, I think maybe what I said got misunderstood. Like, I think the governments know they can't stop Bitcoin, right? So it's, again, there's a 10,000 nodes that exist in over 100 countries. What I'm saying is that they have to make it, the way I want to put it is, like, if they want to attack crypto and make it like illegal to own or make it very difficult, they run a real risk of losing intellectual capital. They run a real risk of one of the most powerful technologies that's been created going away to another country, almost like the United States is a brain drain on other countries. We take their talent, we take their resources, bring it over here. It's almost a risk of a country being too tough against it, that they will lose this growing $1 trillion asset class that's going to put, could potentially benefit trillions to the company's GDP. So that's why I don't think they will. They haven't treated it poorly because they know they can't stop it. And I do think competing currencies will make them act better.
Ryan, can you clarify the tax comment you made? Because I don't want to misconstrue things. If you buy and sell cryptocurrency in the United States, you do have to pay a tax on it. So
Correct.
I don't know if you just want to clarify what you made, because you said it was something along the lines of, less able to tax it, or I don't know, Moki said it. Moki
well, I think,
it.
We're thinking about everything in American terms, right? Because that's where we live. I think if you're living in other countries or other places, like, people have to believe in the viability of the state and to exist and say, I will pay my taxes, or if they don't believe in it, they will look for an alternative way. If you're living in Venezuela and you don't even put a price on something because inflation is so rampant in a day, and cryptocurrency doesn't look that inflationary. And why would you want to pay taxes to a government that's destroying your wealth so viciously? I think that they would act better because they have to compete for your interest and belief in their viability as a power. So generally for the world, but I think it will have probably lesser of effect in the United States because, again, we live in a more privileged society.
Thoughts on that, Moki?
Yeah, my only thing with the U.S. is and how they can stop crypto is you're buying crypto with U.S. dollars, right? The United States is the one that's issued those dollars. They can easily, get the financial institutions together and say, hey, any transaction going to these exchanges or going through these brokers ends, and they can eliminate the crypto space. I'm not worried about them doing that. I agree with Ryan. I think they don't want to lose that sort of advantage of potentially having something that they can use themselves as an asset class. I just worry that as more countries get on board in limiting how crypto can be used in their countries, like China is what I've been reading, is they've advised their financials. Now, I'm not comparing the United States to China, but they've advised their financial institutions to basically not use crypto. And I think that the more countries that do that, and the worse it's going to be for the crypto market. It can't be a good thing because it's going to limit market cap. And this whole idea of eventually, once you get to all 21 million coins, that then it becomes less volatile and it becomes a store of value, I can jump on board with that idea, because then I can say at least, okay, all the mining stuff is done, everything's done. This is what's out there. This is what it's going to be worth now. If volatility were ever to come down, I think governments would jump on board as using this as an asset. But I think the biggest asset behind this is not so much the cryptocurrency, but the technology behind the cryptocurrency. And that's what the governments, and that's what I think United States financial institutions will start to adapt. And I don't know if they're going to call it crypto or whatever the heck they're going to call it, but it will do, hopefully it will do good things for customers and for people that use that technology going forward. I just don't believe that out of these 10,000 something coins that any one of these really, I know outside of Bitcoin, Bitcoin Cash, Ethereum, and those, I don't think any of these other ones will have any sort of place in our society as far as actual currencies or actual stores of value or anything that will be around in the next 10 years if the government doesn't get to them sooner by putting some sort of regulation, which I think is, from my standpoint of view, I sleep better at night knowing that if Fidelity, my broker, shut down tomorrow, $500,000 of my portfolio will be transferred over to the next broker the next day. I think, Ryan, I don't know where the majority of your portfolio lies, but if you wake up tomorrow and that broker is out of business, what happens to your portfolio? Your cryptocurrency portfolio is something that I'm curious about too, because it's difficult to say this builds wealth and stores value when, in my opinion, tomorrow it can all be gone if there isn't some kind of regulations and insurance behind it. I know there's private insurance that have started to come for a lot of these brokers, but there is no sort of governments that are regulating those. So what happens if tomorrow your $250,000 or $500,000 crypto portfolio is wiped out? How do you get that back?
So something that I gave you, that Bitcoin Cash I sent you, opened up a wallet for you that has a QR code. You can literally write that number. You can write that QR code down. You can remember that QR code, and you can carry massive amounts of wealth in your mind. Never has wealth been able to be transferred, that amount of wealth, in such a way where you don't need a custodian. Part of the beauty of it is not needing or trusting a custodian. It's you having the ability to take responsibility and protect your wealth the way you see fit. You can send it to different portions of different QR codes all over the world and decentralize your wealth. You have the power of your finance. You're not trusting an institution like Fidelity or the stability of the American government or the Chinese government or where you're from.
Who are you trading your crypto with?
What do you mean? Or in terms of business, I encourage all my vendors to transact with me in it. I use it for a percentage of my business. I give out as much crypto as I can to people, so they give it to me back, and we transact that way. I believe tomorrow I'll do my largest company transaction in Bitcoin Cash ever of over $8,000. And I want to be, and part of my business strategy is to acquire as much Bitcoin and Bitcoin Cash as possible for the 2025 bull market. And I plan to retire at that time, or at least fire in a way. I like Dave in the discussion here, recreational employment. And going into like the thesis real quick, I'll touch on it and why I mentioned like the possibility of that and why I don't think the bull market in cryptocurrency is over, the bull market, because if it is over, this was a pathetic bull market. Bitcoin's first bull market, it went from $34 up to $1,100. It did a 34x return. It never went back to its previous all-time high, never retraced from there. And then from $1,100, it ran all the way to $20,000, roughly a 17x return. And then again, we never retraced $1,000. And now we went from $20,000. If we only 3x, if we 34x the first time, 17x the second time, if we don't at least 8x, like I expect the volatility to die down. I don't expect 17x return from Bitcoin. I expect at least an 8 times return. I think it's too cheap to sell your Bitcoin. I think, and I think 20,000 is a very solid floor. Because again, we've never retraced our previous bull cycles all-time high. And it's very difficult to do because the amount of Bitcoins coming into circulation is now in half. And it's trusting the rules of mathematics and not the whims of politicians is the argument for me.
Okay, I think one of the common trends we've been seeing here, that at least if I can read your facial expressions, is every time Ryan brings up something in regards to buying and selling at a specific time, right?
Yeah.
So talk to us a little bit about why that's bothering you, because
Yeah,
I can tell.
It just it goes against everything I believe. And I think, you know, I will admit here, you know, and I'm never hidden behind this. I have a bias, right? Like I studied Jack Bogle's work, and I have a bias towards in investing. It's difficult for me to think to set. I can't accept something that's this speculative as an investment. And to anybody, I just want to ask you if you can honestly ask yourself, are you an investor or you're a speculator, right? And for me, an investor is a person who goes out, who buys businesses, whether you're buying them as individual stocks or you're buying them as a pool, like index funds. And then you have a long-term expectation. You're not worried about if that business is going to be viable in the next, you know, 5 months, 10 months. You have a long-term expectation that that business will continue to work and produce something, whether it's a service or a good. It's going to produce something. So it's going to spit something back, and over time, its value will rise. If you invest in index funds, you're simply just saying, I believe. If you invest in the S&P 500, I believe in America's future, right? Every crash, since 1929, everything we've had, everything that America's overcome, America's been growing. So if you invest in an index fund, the S&P 500, you believe in that. If you invest in global diversification, you believe in the whole world. That's something that you can easily measure. You can calculate, you can measure. For me, speculation is betting on price. So I hear a lot of different, well, it's done 30x, it's done 20x, it's done 17,000, it's done 30,000. That to me doesn't tell me the value of this. How is this value calculated? That just tells me what the price of this is. When I buy my index funds, I don't even look at the price of the index funds, nor do I know what the price of my index fund is, because I simply don't care. I understand the value behind it. I understand the businesses that are building things, that are making newer technologies that I could have never imagined in my life. And 20 years from now, I'm assuming these technologies will be even more unimaginable. And I'm assuming these markets will be worth even more. Of course, I don't know that for a fact. I'm not saying, but if 20 years from now, America doesn't exist, neither will my index funds. I'll be okay with that. If 20 years from now, America is still plowing strong, my index funds are doing great, there's a huge possibility cryptos might not exist because they're not tied to the GDP currently of what America produces. It's our businesses that are tied to this. So my biggest problem at the end of the day is the speculation. And I think I'm not going to hide that. I think when you speculate, it's going to lead you the wrong way. It puts a little bit of a cloud or sort of like a haze around you where you think the market only goes up. Now I know Ryan and you guys and you, Rich, you guys don't think like this. I'm just speaking on the average investor, and what I've seen in the interactions I've had on my channel is people only think this stuff will go up. And I like being a contrarian on the other end that says, hey, look at the time in history where this hasn't happened, whether it's the star fund manager, whether it's the new big shiny thing. I don't care what it is. When you speculate on price, and you think that things will only go up, unfortunately, that will lead you astray, and things don't go up forever. We just have to kind of make peace with that. There's going to come a time where there'll be a country more powerful than America. That's why I have diversified index funds that own pretty much the entire globe, even if it's a small percentage of it, they own the entire globe. I can't think of a time where this type of asset class, because I label this more as a commodity than anything else. I label this on the same level as gold, as precious metals, as something that doesn't produce anything. It's just simply just a commodity. I think there won't ever be a time where the GDP or where a commodity like this will be such influential on the GDP of a country. I just can't imagine it. I could be 100% wrong. But that's really, Rich, where it comes from. I don't like speculating on price because I think it's just all air at the end. We're just talking. But if Ryan, you knew the price today, or if you, like you said, with certainty, you have 70% certainty, I think we would see trillionaires walking this earth if people knew with that good of a certainty that's where it was headed. There would be a lot more people with a lot more money than what we have in this world today.
Sure. Now, I do want to at least reply to Kevin's response because he is right. I do hold a lot of cryptocurrency on Robinhood, and a lot of that is because I started my channel talking about investing, stocks, and different things, and it's very beginner welcoming, and I spent $10,000 in the cryptocurrency on there as talking about as an investment to relate to other investors, and it's just so happened to turn into $175,000. So when I do a portfolio review of like largest things, like I bought like at that time, and a lot of that money is money I plan to exit the market with, based on my thesis. And I think if you want to follow me and see if I'm right, go ahead. And if I'm wrong, you can come and laugh at me. I do hold a lot in private wallets, and I use that for transactions. And I think if you really want to like go along with the market and you don't want to try to trade around it, like I'm attempting to do, you can put it into a cold storage USB drive and hide it somewhere and protect it that way. And you can wake up in 20 years and see how you did versus the stock market. Index funds are fantastic. I do hold quite a bit of them, and especially in like retirement accounts. Like for me to like if I can't touch the money until I'm 60, the rest of my wealth outside of that, I want to try to make massive amounts of wealth and outperform those things. So I'm totally for investing in index funds, but my challenge to myself, my personal hobby, I don't play golf. I don't do different things. I study about ways to outperform the broader markets. And so far I've been able to do it. And what Moki did point out is correct. Being contrarian in nature can be very friendly. And right now, crypto is a crowded trade. And when it was very low, that's what I was betting on, that eventually it would become a crowded trade. And I think Moki's right. Eventually, it won't be a crowded trade, and there will be the opportunity. But that the contrarian also plays well, and also investing in diversifying. You can also diversify your investments, as Peter Lynch used to say. You're protecting yourself against your own possible ignorance, and that's good. But if you are giving up an opportunity to outperform, and like Moki said earlier, you can either get more wealth faster, or you can delay that process if you're wrong. It's a risk you have to be willing to take.
Yeah, and for those who are listening that are not familiar with cryptocurrency, the reason Ryan's kind of talking about Robinhood in that way is because you cannot currently on Robinhood, you cannot take things like Bitcoin off of Robinhood and put it in cold storage. People call it like the IOU. Robinhood's been like, yeah, well, we promise, that you'll be able to get it off of our brokerage at some point. So other exchanges,
Robinhood's never lied to the investor, right?
Yeah, they're known for their trust. So but that makes sense why that'd be more of the transactional one, or not transactional, but the ones that you would actually sell versus keep in cold storage. Ryan, or actually, let's go over to Moki real quickly. I just want to know, what are your thoughts on things like gold and precious metals? Let's like play the old school Bitcoin, right? Like what do you think about that kind of stuff?
I don't think it belongs in a portfolio. It goes back to kind of what Ryan was touching on, is you have to take more risks to get a higher reward. And I completely agree with him. I mean, I'm not debating that. But the fact is, people bring up these gold and precious metal talks when there's a bear market. In pretty much since 1929, I don't know how it was before then, but since 1929, we experience out of every 10 years, we experience 2 bear markets in the stock market. So to go into an asset class that underperforms 8 out of the 10 years, just so you can be safe for 2 years, doesn't make any sense to me. So that's why I think my biggest reasoning for not wanting to get into crypto is because I believe it is a commodity, just like gold, just like pretty much any of these other asset classes that are used as a hedge when things go wrong in the stock market. And I would never invest or advise anybody to invest in those types of asset classes. Therefore, I never invested on myself. And am I at all sad that I missed the train? Absolutely not, because I don't personally believe in it. And even if I did invest in it, I think I wouldn't have the mental capacity or the risk capacity to hold it the way Ryan holds it and the way you hold it, Rich. I'm not going to lie to myself. I don't have that type of risk capacity. It's not the way I learned about investing. It's not historically, there's never been an asset class that has outperformed stocks. You can outperform for a decade. You can outperform for, if you get really lucky, 2 decades. But to outperform businesses that actually produce something with an asset class that doesn't produce something, I think is just wishful thinking, in my opinion. It really is. And whether, any bubble that's ever formed, I think there's always been companies that rise from the ashes. There's always the Amazons, the Googles, the Facebooks that rise. And I'm sure in crypto there will be as well. But we need to understand that this is going to be something that will probably be the likes of the internet bubble. There'll be the likes of what happened in 1929, 1967, 68 with momentum trading and go-go era. There's almost a decade every single time where interest rates get really low, people start running to other asset classes that are not stocks, and they see great performance. But I have yet to find one, and you can correct me if you know of an era or a time where a different asset class has produced better returns than the stock market since basically 1920s.
So if I can interject, the only thing that matters in any asset is supply and demand. And the reason I maybe foolishly think I can predict bull markets in cryptocurrency is because we have a disruption in the supply chain. The same thing happens in gold and silver and in other commodity markets. But when the supply becomes too low, we must overpay people to bring this commodity to market. And right now, gold is just too profitable to mine. I think you can mine an ounce of gold for around $800. And while the price is at $2,000, there's still going to be too many profitable miners. We need miners to go bankrupt. We need miners to become a really bad business to get in, and where we actually need this commodity more in the market, we will be willing to overpay for this commodity. So while it's similar in nature in that way to the crypto market, supply and crypto's taught me a lot about that. In the bull cycles that have happened in gold and silver has been from a market when it was a very bad business to get into. There lied the opportunity when there were not enough miners. The same thing goes for oil and gas. If it becomes, the price of gas goes up so high and you have people going all over the world because they can profitably pull oil out of the earth at $150 a barrel, there's going to be a flood of supply and then price will fall back down. That's why I actually make a case where I don't see anything really from a market standpoint wrong with price gouging, because it'll bring supply to the market. So like during a hurricane here down in Florida, people will start selling a case of water for like $15. Well, that's telling the world, come and bring all the water here because we really need it. And then they will bring it because it'd be very profitable to do. But if there's a shortage, then there will be the opportunity. It's just simple economics. So I could see myself buying precious metals in the future if it ever became a very bad business and there was a disruption in the supply chain. And that's why I'll be buying a lot of Bitcoin in 2024 to get ready for the disruption in the supply chain.
Moki, thoughts on that?
I got no thoughts, man.
Okay.
Yeah, I just look. It goes back to, again, give me an asset class, man. Give me an asset class that beats the stock market over time.
There's some, Bitcoin. There's
whoa, no. Give me an asset. I said since 1920. Oh, hang on. You guys are misunderstanding. You guys are giving me 4-year periods here. Give me an asset class since 1929 that beats.
It was a 10-year period, but there are some chirps in the chat, so let's just get down to it. We talked about earlier, you mentioned something along the lines of, I can't DCA into something that is up and down 40% in a month. You could, right? You could set up a weekly buy where you buy $50 of Bitcoin every week and you don't look at the price, just like you do an index fund. Do you see any place for that in your portfolio where, let's say you put $200 a week into index funds, taking $10 of that and putting it into Bitcoin a week, I'm just using random numbers here, you don't see that being useful in any case?
I don't. Rich, to be honest with you, I have a philosophy that if every person followed something as simple as investing in index funds, they would all reach millionaire status. I don't pay attention to anything outside of that. I stick to what I know best. I think I understand there's always going to be newer and better things, and maybe I'm 100% wrong on this. If I could afford to put freaking couple of $100 a month away into crypto investments, but I always look at opportunity cost and what I can control. A lot of this stuff I can't control. The stock market I can't control. I can control how I diversify. I can control what I think my expected return will be over a 20, 30-year period. I can get that to an accuracy rate of probably 95, 98%, somewhere around there. Of course, there's always that unknown And any investment, there's going to be a great unknown, because if it wasn't, it wouldn't pay a premium, right? If you want something safe and secure, sit in cash, keep it in a bank, and you'll have your 50,000, of course, minus inflation. So even that's not secure, but at least you eliminate the great unknown there. For me, with the crypto space, it's so early on that the great unknown exceeds whatever profits that I can come up in my head. And I know you guys were early adapters and you got in at great low prices. For me, at these prices, I would almost feel like I'm chasing the market, the crypto market. I'm chasing something that has run away from me. And if I wouldn't have invested in it back in 2017 after it crashed. And a little secret, I did own Bitcoin back in my speculative days. So I'm not here to say that I've never invested in it. I have invested in it. I've owned Bitcoin after in 2018, I bought Bitcoin at 3,000 and I got out at 9 or 10,000, something like that. So that was, again, me before I embraced index funds, before I embraced passive investing, before I embraced something that works so well that you could do it with your eyes closed. And ever since I started embracing that, I have stopped looking for other ways to outperform. Not that it's impossible. And I think, Ryan, you will outperform. You've already shown us that you can outperform, and I'm never going to doubt that. And you too, Rich. But I think the probability of outperforming is so low. And the more people that get into it, the lower that probability drops. So then you're going to have a lot of people that end up underperforming. We've seen it with ARK funds. We're going to see it with the crypto market. We're going to see it with Bitcoin, all these other coins. As the volatility, in my opinion, starts to heat up even more, drops of 20, 30% will scare the average investor out of this stuff. You can hodl all you want, but there's going to be people that are selling. That's why this thing is dropping 20, 30%. That's going to open up to a lot of speculation, manipulation, and it's going to open up to the average person who I'm talking to right now, who's hopefully watching this live stream. It's going to open up to them losing a lot of money when here they could have just invested in something that was not necessarily safe, but something that had more of a track record, more of a history, and something that you can actually calculate intrinsic values on and say, hey, this is why this is worth this much.
And I want to add to what Moki said there is that Peter Lynch, one of the best investors in Wall Street history, wrote a book everyone should read called One Up on Wall Street, ran the Magellan Fund for, I believe, around 12 to 15 years.
13 years.
There. And he returned investors 39% annually, crushing other funds. But did you know that the average investor that invested with him only made 7%? People are bad investors. People invest with their emotions. People do not look at broad, they don't try to be contrarian always. They chase things that are shiny object syndrome. My videos about cryptocurrency in the bear market got very little views. My videos now in the bull market get a lot of views. It's not good. So I think you have to really mature as an investor if you want to get into more, especially if you want to try to outperform. It's not easy to do. You have to endure extreme volatility. I saw over 6-figure swings in my portfolio just this weekend. Yeah, you have to. It's not for the lighthearted, and you really have to have it. It's not for everyone, and I'll definitely say that. But if you want to and you enjoy it, and you find a passion. See, for me, I'm lucky. Like my 2 biggest hits in investing in the last, high conviction plays that have allowed me to outperform was going after crypto in the bear market. It was going after Tesla when it was 200 pre-split or around $50 when everyone thought I was going bankrupt, but yet I saw them selling massive amounts of cars and at a nice gross profit margin. So there lies the opportunity. I don't, from an investing standpoint, I don't think everyone should necessarily rush into it now. They should have some kind of philosophy into it. And I do really believe in cryptocurrency for a lot of humanitarian purposes that will help diversify against tyrannical control, manipulation of currency. And I do think it's a net positive for humanity.
I think the cryptocurrency and Bitcoin conversation in countries where inflation is rampant and their government is just can't be trusted is a whole other one that can be had. And I'm sure Moki could even find common ground on that for sure.
Absolutely.
But I did I think I saw some beads of sweat rolling down Moki's face when Ryan said
6 figures, man.
6-figure swing in one weekend.
You know how hard I worked for 6 figures, man?
I didn't work very hard for mine.
Yeah, again,
the market did the work.
Yeah, no. I understand. I'm saying how hard I had to work with the market and my index funds to make 6 figures. No, man, I agree with you. I think we're finding common ground. We see that, and I'll speak some things you guys maybe didn't know about me. I was in Tesla early too, but I got out at the wrong time. So you can see why I'm not for market timing and speculation, because I always get it wrong. And I'd rather admit that and have that be a fault of my own. And I think admitting that gave me the ability to endorse index funds and embrace them to the point where I've never had better returns. And I haven't had to worry or sweat the volatility that other investments when I was younger and being invested in individual stocks or high growth spec plays did. All that volatility, all that created was sort of, I felt like stress that I didn't need in my life. And index funds really simplified everything for me. It allowed me to 3x my wealth really quickly, faster than I would have imagined. But of course, we've been in the greatest bull run when it comes to the stock market, and even what happened in March of 2020 is nothing to a crash that could be a lot bigger than that 50-60% like we've seen in the past. So I'm not going to say that this will continue with the stock market, but just to touch back on, I cannot see myself losing $1,000 in this. So I can't imagine losing 6 figures, or not losing, I shouldn't say losing. I can't imagine a 6-figure swing. And I don't want to get personal or into net worth or anything, but even if my net worth was $10 million, I can't imagine seeing a 6-figure swing in my portfolio. It's not, I wouldn't be able to handle it. And I'm, willing to admit that. And I think you, Ryan, too, will agree that most people, I don't know, maybe if I'm not the majority in this, but most people wouldn't be able to handle it either. And unfortunately, they would make the wrong decisions that I've made before as a well-educated investor versus what these new investors are doing with no research, no convictions, basically reading something on a forum, on a Reddit, on a tweet, and kind of going in there blindly. I think my end goal with all this, whether the cryptocurrency does well or not, doesn't really matter for me. I'm not invested. My end goal is to try to save a lot of people from losing money and buying into assets that are highly speculative and buying at the worst possible times. And if I can reach one person and stop them from doing that, maybe I ruin their future, and maybe I save them a bunch of money. So that's all I got to say on it. For me personally, there's no way in heck I can handle it. And I'm willing to be man enough to admit that. And I think that's fine as long as you know what you can handle. I've talked to investors that can't handle a 60% stock position. They need to be 80% bonds or 60% bonds. And I say, great job. You figured out what you can handle. Of course, they know they're going to have lower returns. And I'm not going to sit here and say that, seeing something run up 300, 400% while my index funds are doing, 20, 40%, doesn't kind of make me think, oh, what if? But at the same time, what ifs don't do me any good. I know this is where my safe zone is. This is what will keep me invested long term, and this will help me get to the status that I'm going. I think me and you, Ryan, are both on the same sort of trajectory. We want to retire early and buy our time back and be able to do what we want with our investments. And I think we're taking two different approaches to getting there, not just with our investments, but in the way we treat and look at money. I know we've talked before about you kind of using debt as a tool to help you get further along and leveraging it. And of course, I'm anti-debt and 100% cash. So you could probably see where I'm not going to be a Bitcoin a lover either when I'm so committed to physical cash and the US dollar and buying things in cash. So I've had a lot of fun tonight, man. I think you've opened up my eyes to possibly maybe down the road, if I see it profitable enough, to maybe put away a couple of dollars into something like Bitcoin Cash. That's the only one that I'm honestly still seeing as a big use case. You really opened up my eyes when you sent me that $5, and really opens a world of possibilities of how easily we can send money to one another within really milliseconds. And the only other thing I can say on it is the cost. I know the transactional costs for that are really low, but costs to actually own this as an asset class are still high. And if Jack Bogle still would see these costs. Something like is it CoinDesk or Coinbase? I forgot the name of them now.
Coinbase.
They're charging Coinbase. They're charging like 50 basis points for transactions under $10,000. That doesn't do anything good for the individual investor if you're heavy into speculating and buying and selling. It's really the middleman that's making out there. Traders can trade between one another, and that's what makes up the market. But the difference is the person in the middle who's getting those transactions. They're the one that are actually making the money, while the traders are kind of just trading back and forth. So I think if costs can come down, and I'm sure as more people start to use it and it becomes more secure, it could. But for now, I don't see myself probably within the next 4 or 5 years getting into holding this as an asset class.
So again, I want to touch on the fact that that in this time in the market, and certainly if I'm right and we go much higher, we're going to need more voices like Moki to save people from themselves. I don't think it should be a government force. I think it should be in a voluntaristic way by people offering thoughts and opinions in the market. And the best time to buy crypto was last year. This is not the best time to buy it. Do I think there's some more juice to squeeze out of this thing? Sure. But your level of risk is much higher, and you have to be willing to accept that. So I definitely appreciate Moki's contrarian view. That's where I made most of my money, was being contrarian. And I really appreciate the debate. And I haven't heard from a bear in a while. And I really thought it was a good idea to do this at this time, especially after the crazy market volatility that we had, and hopefully bring more light to this asset class to people that are watching and listening, and hopefully they found value. And if you guys found value, please let me know what you found interesting in the comment section. And Rich, I really appreciate you hosting the event. We couldn't have thought of a better host. You do a great job of your podcast, and hopefully we can bring more traffic and awareness to what you're doing by highlighting people like me and Moki that are out here trying to encourage people to not be consumers in a way, and try to delay gratification into assets that can improve their lives and hopefully improve the world.
Yeah, I love it. I think both you guys wrapped it up nicely. And Moki, you put it best when you said, both you guys have the same goal, right? It's just taking different paths to get there. And we can't tell what's going to happen. I mean, we'll just have to look back in 20 years and see. And odds are, just having the mindset that we're even having right now, talking about this on a random Monday night, both you guys are going to be very successful just doing it your own way. So again, I said at the beginning, but these guys actually reached out to me to do this on my channel with significantly less subscribers than they have. So they're getting less viewers than they would probably get on their channels, but doing me a solid by trying to get people out there. I was actually thinking about this today. I don't think I've ever asked on my podcast for somebody to subscribe. So if you guys feel like subscribing, feel free to go ahead.
Stop that. Subscribe to this man's channel. What are you talking about if you feel like?
Hey, subscribe. I'm all about free will, man. Let people do what they want. So
there's Moki Finance private members in here, guys. You better hit the subscribe button on the registration room and send me a screenshot that you did it.
I appreciate it. This is why I like to have walking around with my posse, right? You guys are just going to strong arm them into making them subscribe. So it's good.
I guess, yeah, I really appreciate the debate and got to share a lot of thoughts and feelings towards it. And it'll be really interesting to see where this market goes forward. And I hope everyone trades safe. And Moki, I got to say, I really respect and appreciate what you've done. And I think you've brought light. And it's amazing. I mean, you've really grown your channel very well. And I think you'll benefit a lot of people. And you obviously are. I mean, how quickly you've grown, man. And thank you for doing this. I really appreciate it.
Yeah, man. Thank you as well. Just one final thought here is, guys, don't listen. And hopefully what I always say on my channel as well is, don't listen to this podcast or live stream and make any kind of sudden changes based off what me and Ryan said. I think we each have our own beliefs. That should not be the same belief you adapt to. Come to your own conclusions. And Rich, thanks for having us. Ryan, keep killing it with the crypto, man. I got nothing to say. You're the GOAT, man. You're the GOAT. Hey, I'm just along for the ride and the entertainment value, and you're kind of living through you, because there's no way I'd be able to do it.
Hey, you got $2 of Bitcoin cash.
I'm still holding.
Tomorrow might be $1. We don't know.
All right, guys. Appreciate it again, and have a great week.
All right. Good night, guys.
Night, guys.